Next guest thinks that 2020 will be a great year for the markets with the Fed committed to low rates and no recession on the horizon. Ghabour is the co-owner and managing partner of Key Advisors Group, and he joins us now to talk about all of this. One of the things that we talk about going into this, and we just heard from Joe Bruce-Willis, that things are going to reset in the next couple of months. And investors need to pay attention to this because, for instance, labor numbers may not be as good as we have thought this whole year. Yet you're confident we won't see a slowdown. Why?
No, I do think we are seeing a slowdown right now economically. I don't think that ends the bull market. I believe the bottom line from a market perspective, until we have a recession with the macroeconomics behind us, with the Fed off the table, I think this market has legs still this year and we'll see double-digit returns. Now, I hope that we see a pullback of 6 to 8% here in the near term, because my one concern here is we are getting a little bit complacent. There's no fear in the market. VIX index has been pretty low. So we need a pullback in order for this market to stay healthy, in my opinion.
And for you, what would a healthy pullback look like?
At least 6 to 8%. We need some fear in the market. That may sound silly, but when you keep that fear in the market, cash stays on the sidelines, and that's healthy for a bull market.
All right, so I think it was Steve Sosnick who told us earlier that he had been watching people who'd been on the sidelines all through last year at the end of the month, jumping back in. That usually signals a problem and that we might be getting what you're talking about. Do you agree? And if so, when do we get the 6 or 8% pullback? I'm trying to time here, but are we talking mid-year?
I think we're going to see it sooner than that. If I had to bet, I would say within the next 4 to 6 weeks, we would see that type of pullback.
Why so quickly? Is it the Boeing factor, for instance? Can we pull up Boeing again? We're seeing Boeing go, drop today because of those emails and those tweets, but Boeing's going to have a negative impact. We saw layoffs affiliated with Boeing this morning, that supplier. Is that going to have the kind of impact that would lead to what you're discussing?
So Boeing definitely has an impact overall. I think the other thing too is, the overall manufacturing has really showed some slowdown. That coupled with the fact that, look, investors have had a record year last year and the resilience has stayed this year. I think it's prudent, and I think you will see some profit taken here done in the first quarter.
Okay, for the investors who are building their cash right now, who are waiting, getting their powder ready to shoot, say 4 to 6 weeks, what sectors or any particular stocks you think they should be looking at when if what you say will happen does happen?
So when you take a look at the pullback, of course, everybody's situation is different in their risk tolerance. We know that. But I personally still like financials. I think tech will still do well this year. I'm making a contrarian call, too, on some energy stocks. I'm a boring investor. I like dividends.
Let me interrupt you there, because
Okay.
I asked earlier, and I'm keeping an eye on oil because if dividends fascinate me, and there are dividend yields, for instance, at ExxonMobil, I think it's almost 6%. The traditional oil companies have that kind of dividend yield, and yet their valuations or their stock prices have been flat. They trade within a range but don't really go anywhere. Is that what you're talking about?
I am, exactly. And especially for my client base, income is an important thing for our clients. And when you look at companies like Exxon, like you mentioned, they got a healthy balance sheet. They didn't perform well last year. So as a contrarian, I like that. And then you have the dividend yield. It's a little bit more of a defensive play, but I think late cycle, having some defense in your portfolio is an important thing for investors to do.
Okay, and as I wrap up with you, is there an unexpected event? I know the black swan event. I don't know what that would be, but that you're getting hints of this is something I need to pay attention to for your clients?
One of my biggest concerns short term is what's happening in the repo market right now.
Yeah.
Okay, and if some news comes out as there's a reason why they're having to put liquidity in, that could be the black swan event that causes a big sell-off.
All right, Ghabour, I appreciate your being here.